please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a steady start, at least for the week. Let's see what the remaining part of it holds. But we do have the global cues which are aiding us in terms of sentiment today. And so we can see the Nifty, which is up around 0.7%. We have the Bank Nifty, which is up around 1% at this point in time. But a lot of stocks continue to be in focus, and we're going to be discussing a lot of that in the next 1 hour. So, for example, we have Sun Pharmaceuticals, top loser on the Nifty. We have Spark, which is down 3.5% as well. Tell you the connection there soon enough. And even from the broader markets, you can see the kind of reaction which has come in on stocks such as OBC and Simphaoli Sugar. Both those stocks down anywhere in between 15 and 11% at this point in time. So interesting day in terms of stocks and in terms of news for the Nifty and for the index as a whole. It's turning out to be a positive start. Hi, Prashant.
Ekta, hi. And from last Thursday's lows of 10,340, we are up about 200 points, 220 odd points or so. So this is third day running, a pretty good session so far. And it's broad-based. I think that's essentially the good thing. So sectors which are doing the best, real estate, I mean, the Nifty real estate index is up about 2.25%, by far the biggest gainer. The auto index is up about 1.7%, and you got the private bank space, which is up about 1.16 odd percent or so. You know, the good thing is banks, as you said, are making a comeback. Banks are completely washed out. They came back on Friday, and they're basically back in action. The Nifty bank is almost at the day's high. The Nifty is not so much. So we'll see. We'll watch the space closely in terms of what is likely to happen. Let's get Sudarshan Sukhani in on the conversation as always on the top. Sudarshan, good morning. Good to have you here. 72 points. What would you do now?
Yeah, good morning again. Well, traders should be long in the Nifty and the Nifty bank, and they should be planning to exit by the close of trade today, which means I do not think positions should be carried forward tomorrow. And the reason is that this rally, and very attractive and tradable it has been, is still at so far a relief rally in an ongoing correction. We are staring at very strong resistance at 10,600, 10,630 in the Nifty. We are almost there. So take advantage of whatever rallies happen intraday, but do not carry long positions or short positions or anything overnight. This rally could face strong resistance.
Okay, what would be the stocks in focus according to you?
Well, the stocks are big, to go with today's momentum, and the momentum is clearly on the upside. So we start with Apollo Hospitals, which has been an outperformer and is likely to outperform, continue that outperformance. So I suggest going long in Apollo Hospitals, buying it. The second stock, again an outperformer, Escorts, is an relatively safe buying opportunity for the day. The stock has been completely out of picture while the market was going down and is rallying much better now as the market is going up. This is a classic strong uptrend stock. And the third is Kotak Bank. I'm relatively upbeat on private sector banks and extremely downbeat on public sector banks. So Kotak is part of the private sector group. For today, I would suggest buying Kotak.
What else is on your radar, Sudarshan? I mean, before I come to ask you that, so at what level does this go beyond just becoming a relief rally in an ongoing correction?
Well, the strong resistance is in 10,600, 630. Okay. So if the Nifty crosses, say, 630 and stays above it for a couple of days, that starts giving a sign that this is not a relief rally or whatever it is. It's not just a correction. We'll have to find out what it is, but it may be, the questions will then arise then.
Okay, Sudarshan, one of the key underperformers this year has been Dr. Reddy's, along with many others, but that stands out because of negative news today as well. It's down 12% year to date. It's down around 1.5% today. How would you approach the technicals, and if someone wants to take a short position?
No, I don't know about short positions because, you know, these pharma stocks go up also in a similar dramatic fashion. It's very risky, but I would not suggest buying this stock. Dr. Reddy's is a very poor underperformer, and that underperformance persists. So this is not a buy on dips opportunity. This is not a bargain hunting. Stay away from it. Cipla, for example, is a much better chart, but Dr. Reddy's is something complete avoid.
Okay, all right, fair enough, Sudarshan. We're going to let you go on that note. Thanks very much for joining in this morning and talking to us. So those are some technical calls coming in for the Nifty. Currently, we're at 10,568. We have some more F&O strategies lined up. Rahul Shah is with us of Motilal Oswal to tell us what he's strategizing this Monday with. So Rahul, over to you then, stocks as well as index.
Yeah, hi, good morning. I think the metal stocks as a sector has been doing quite well, and I think at every dip this stock has been bouncing up after that very well. So in that space, I think JSW Steel looks quite interesting in the metal pack. So I think that the stock can do much better from here also. Fresh longs also built up we are able to see. So I think buy JSW Steel with a stop loss of 307 and target of 328. Second, again, the banking has shown again a good bounce back in last two trading sessions. So private sector banks again has smartly moved up. So Kotak is one of the top backs in that sector. So I would buy Kotak with a stop loss of 18085 and target of 1135. And third, from the software space, I think mid-cap IT stocks have done quite well in last three series. So in that space, Tata Elxsi is one stock, we've been liking it. So I would buy Tata Elxsi with a stop loss of 1030, target of 1100.
All right, thanks very much. Appreciate you joining us, Rahul, with that list of stocks that you'd like to focus on. I mean, 7980 odd points on the Nifty, 10,570 is where we're at. From the Trust India Debt Capital Market Summit, which was held last week, market veteran Ramesh Damani moderated a panel on valuations and consolidation in the financial space with some of the biggest voices. Here is an excerpt of that chat that Mr. Damani had with his investors, Rakesh Jhunjhunwala, and what he makes of risk-reward ratio in equities. Now, listen in.
So there is a match-off between risk and return. तो यार मेरे को इक्विटी में 14% देगा और भी तो 12% टैक्स लग जाएगा. तो इस तरह मैं 8% या 6% टैक्स की बॉन्ड नहीं ले लूँ. But think about it here.
But there is a differential now, Rakesh, between 6% and 14%.
There is a risk also.
There is, but you know, does the 8% compensate you enough for it?
I'll have to ask my only client.
That's Rekha, by the way.
I think we are in a very I'm in a dilemma.
Really? Would you raise cash and get into...
I never raised cash in my life. I don't pay
No, so I mean to follow up on your hypothesis that you are nervous and you don't think you're compensated for the risk in equity, then how would you be...
The dilemma is that technically you don't have a situation where market is prepared to go down. Right? And you have the highest squeeze in history at the lowest level of profit should you. And one of the most bare growth in profits in the last 6 years. Ask Ramdev how many times he has revised his earnings predictions in the last 3 years. So now the question is, technically market is not ready to go down, but market is extremely well valued. Right? So the question is that has market priced itself for the increase in profit growth? That's the dilemma I have.
And if it doesn't happen...
Yeah. So I am not going to put my money anything against other than equity. And I'm going to put as much as my dividend income as interest every year. Because we'll find opportunity. But I think this is something which all of us have to mull. And I think what also has happened, and it happens with me, that when you have a lot of gain in 2, 3, 4 years, right, and I have the highest gain in my portfolio in the last year, the question is we get blind about gain. And we believe that it is here for all time. Right? 5 पैक पी लेते हैं तो सब दुनिया अच्छी लगती है. तो वही नफे हमारा दोस्त राजेश शाह बोलता था कि सब नफे का दारू है. So I think that profit, you know, and having experienced that in 2000, technically we are not there in 2007. Market is not prepared to go down. But that could happen a year later.
But Rakesh, let me just call you out on something you had said before. In a similar conference 2, 3 years back, you were not as circumspect as you're now. And to interview a question on record, you said you expect the index to hit 100,000. And when someone asked you the Nifty or Sensex, you said obviously the Nifty. So what has changed? I mean, do you feel that something has changed?
I'm not saying I am very bullish on India. That's why I'm in
No,
equity.
that was a 3-year, 4-year, 5-year,
No, so
2022 prediction.
But Ramesh, if you have, all of us have seen unprecedented gains in our portfolio. if I'm looking at what I'm trying to say is, if I'm looking at a portfolio gain at 10 years, have I had 7 years gain in 3 years? I'm not saying normalize your period of time, my return may be higher in equity. It's a very dynamic situation. I'm not trying to make a...
Yeah.
The question is, we are technically not ready to go down. We have all had gains, unprecedented, unbelievable gains, right? So the question is that what is the gain we can reasonably expect over the next, say, 5 years or 3 years? So, and I believe, you know, Mr. Bhatt, who's the MD of Titan, he told me one day that why is my P 35 times worse? So I and Utpal did a research. All P's above 30 had 15 to 20% growth, had cash flows greater than operating profits, had payout ratio of 30 to 40%. Abhi idhar to could be Era, Gera, Nathu, Dara, sub public issue 40 times earnings. And the year in which the issue comes, the profit is very high. For whatever reason, in the next year, the profit falls.
Profits falls, yeah.
So the question is that, are we blinded by the profits that we have earned so that we believe this is a party which is going to go and bust? Or we are going to get sub-moderate gains in the next 2-3 years. I'm not talking of 5 years, 7 years, 10 years. I, for one, have a dilemma and difficult to decide. But I'm going to be in equity, no government sector.
Okay, a very candid and interesting conversation coming in there, but that is Sanjeev Mehta of Hindustan Unilever from the Kotak conference. Let's dip in.
Than 10% of the total wealth in the country, and of course there is a trust deficit against big business. Now in this arena of trust deficit, how is HUL living its purpose? Yeah? We always say we are a purpose-driven and a values-led business. So let me share with you some example of how we live the purpose. First and most importantly is building brands with purpose. We go back to the essence of the brand, and unless we are able to occupy the emotional space in the minds of the consumers, we will never be able to build a big brand. It's not just the functional benefits, but also traversing the emotional space. But very importantly, traversing the space which is rooted in purpose. We have about 40% share of the home care market in the country. Yeah? Now, laundry is a big business for us. But you can imagine, if there is no water, we won't have a laundry business. Similarly, we are the market leaders in tea, beverages, coffee. If there is no water, we will be significantly handicapped. So across our portfolio, water plays a very important part. Yeah? So what have we done on the water side?
All right, that is HUL, and we will cut back to that in a bit from now. But I think we have Mr. Rajneesh Kumar, State Bank of India, Chairman, State Bank of India, joining us live now to take some questions. My colleague Lata is here as well. Lata,
thanks, Prashant, and thank you very much, Mr. Kumar, for joining us. Well, first up, sir, I mean, it has to start with PNB, unfortunately. Are the contours of the problem clear? It is only 11,400, or is it that all of y'all have gone back and looked at your links with the industry, and should we be prepared for any bad news, any other things that may go NPA?
So I think what is the exact number? PNB is in a much better position to tell you that number. But as far as our exposure is concerned on Punjab National Bank, so that number is very much confirmed, calculated and advised to the Punjab National Bank. And our exposure on one of the companies, Gitanjali Gems, that also has been crystallized and there was no issue around that. So our numbers, our claim is clear, but because there are some secondary market purchases, so double counting has to be avoided. And that is where I think only PNB can give you a confirmed number.
No, I agree, sir. In PNB, what we have got is that 11,400 odd crores of one kind of exposure and another 1,700 crore exposure to Gitanjali. So we are working with something like 13,000 crore. My question is that, are there other diamond companies or, you know, either because of a follow-on effect or because all banks have gone and done a thorough search? Should we expect that there will be other, you know, either wrong cases of lending or, you know, manufactured LOUs without a credit memo? Any such problems are they likely to emerge? After all, the IBA met over this issue.
So, I don't think so. Okay. It seems to be a case confined to the particular branch of Punjab National Bank. At least for State Bank of India, I can confirm that there is no such issue, no such problem. And I'm sure by now all other banks have also would have reviewed their portfolio and would have arrived at the similar conclusion, because if something was wrong somewhere, by now I presume it would have come out.
Okay. So the other thing that has come from the Reserve Bank, I believe, are circulars telling banks that they have to connect their SWIFT communication system to the core banking system in cases where they are not. I know you all are not involved. Any other instruction from the regulator on this?
No, other than whatever they have said about the safety of the SWIFT and the controls which need to be in place. So nothing else we have heard as of now. And
deadline of April is possible to do this. It's not very difficult for the entire banking system to comply.
Very much.
Okay.
Very much. Very much.
Has the regulator or the government or PNB itself decided who will pay that 11,400? Bankers, when we last heard, there was still some argument between PNB on one side and other bankers.
So I am very confident that things will get sorted out between PNB and the other banks.
Okay, you are expecting them to pay you?
That is my expectation, of course.
Okay, no, but clearly the government or RBI have not come out with anything? They have not intervened?
Not to my knowledge.
Okay, well, clearly the government, the RBI put out a release saying that they have not given any instruction, but that was about 4-5 days ago. So I just wanted an update. So now to come to the other big problem which actually is hurting all banks, all corporate-facing banks, is that February 12th circular of the Reserve Bank on NPA resolution. What, according to you, is the impact on your bank itself? Should we see some of the SDR, SFORA cases getting recognized as NPA either this quarter or next?
Definitely. And but in any case, the accounts which will be recognized as NPA, they were very much on the radar and even before the circular came. And the impact in our case, we have estimated, it's not going to be as large. In my earnings call, I had indicated that what would be our gross slippages, which we had said around 2% in the next year. So that's not going to change much.
Okay. All those stressed cases are included?
Whatever recognition we have to do, we will do in. Yeah, all such cases are included, and whatever recognition we have to do, we will do in March quarter, because RBI guidelines and circular is very clear that no divergence or any such thing will now be tolerated or accepted. So I think all banks will have to be very, very cautious that they recognize the asset as impaired in time and as per the regulatory guidelines. So what I had said, again, just for the sake of reiteration, that our estimates of what will be our NPA are very much available. Only thing is that they cannot be uniformly spread across the quarters. So one quarter you may see elevated number, in the other you may see much less number. So that is all. But the major recognition has already happened, and as a result of these guidelines, whatever is remaining, that will happen for State Bank of India in March.
Okay. So, but they have given you 6 months for cases over 2,000 crore to either be resolved or taken to NCLT. So, should we expect something in the first quarter, or are you going to advance even that recognition?
No, recognition will happen as per the norms, which is 90 days.
Okay.
Now, as per this circular, the definitions are very clear. They were clear also. What circular says is that as soon as any term loan installment is missed, even for a day, principal or interest, so at that stage you start thinking, and the date of reference start from there, 1st March, or for other accounts, if it becomes as and when it comes in, SMA 0, and for 2,000 crore and above exposures, the meter, if I call it, it starts from that date rather than waiting for the account to become SMA 2 or NPA. So that is the only thing, and 6 months is the outer limit. If we feel that resolution is not possible, or we have to ultimately refer to NCLT, and outside NCLT resolution is not working out, so it can be referred earlier also.
Okay. To come to the earlier part of your answer, that if a loan is missed on the 31st day itself, you have to start taking action. Do you think this entire process that has been set in, while it is very healthy perhaps in the long run, might also lead to some acceleration of NPA recognition?
Yeah, that will happen. But as I said, that again, the NPA recognition happens on the 90th day.
Yes.
So that has not changed.
Yes.
So if an installment is missed, principal or interest for a day, the account straight away doesn't get into an NPA category.
Yes.
The only thing is that your action plan should start early and immediately why the installment has been missed. If it is just a temporary one-time problem once in a year, I don't think any major issue. But if it is happening repeatedly, for example, then definitely it should be a cause for concern. And the intent is that if the problem is recognized early, the possibility of resolution is very much there before the things become too late. So to that extent, I don't think that it will have any impact on the NPA recognition, because 90-day norm still remains. Only thing is you are advancing the action much earlier to the account becoming NPA.
Okay. For the system as a whole, do I understand you right? Anything that is S4A or SDR is NPA as of this quarter?
May not be necessary, because suppose we had decided on SDR, say for example in January, right? And only there is a default of 15 days, so it will become NPA in April, 90 days overdue. So it is not NPA on 31st March, it becomes NPA in the first quarter. But only thing is the stand is still, which was available, will not be available anymore. And any resolution plan, whether in NCLT or outside NCLT, the account will classify it as substandard in the first instance, and you have to provide.
Okay. I just wanted to ask finally on this issue, the 525, I was last given to understand that bankers have asked IBA to clarify from RBI whether 525 is going to be reinstituted at all. Is that plea being made to the RBI? And more importantly, what happens to cases where you have already given 525? They will come after every 5 years for a reset. Nothing happens to that classification, does it?
So I think that is a clarification which IBA will take from RBI. But if you ask for my opinion or view in the matter, 5/25 worldwide is the norm for financing of the infrastructure projects, because a infrastructure loan cannot be paid in 10-12 years. So hereafter, whatever project loans you give, they will be all under this dispensation, where you reset the terms, spread, interest at the pre-decided frequency, and amortization is depending upon the concession or the life of the project. So amortization has to be for a longer period as far as the project loans go. And I don't see anything wrong in that. That is the position we always had maintained earlier also, and it should not be, at least going forward for the new loans, it is not a restructuring. For the old loan, there may be a debate, because you had earlier asked for, say, 10-year period, and now it is under 5/25.
Sure.
But I think whatever has been implemented has been implemented. Whatever has not been implemented, will get impacted by the new guidelines.
Okay.
That is my understanding of the situation. Okay. But we will wait for RBI clarification.
Yes, sir, we would. I just wanted to know, have you a new guidance for provisioning for credit cost?
No, I had said that March 18, I'm not giving any guidance. As I said that we will be much more upfront in providing and recognizing whatever remaining is there. And next year, I said gross slippage is 2% and provisioning also 2%. So I don't think there is going to be any major change in that. That is my assessment of the current situation after analyzing all the large accounts in detail.
Okay. Sir, my colleagues also have a question for you. Please stay on, sir. Prashant.
Mr. Kumar, hi. Morning, Prashant here.
Yeah,
so
sure.
Two-part question, sir. Before this entire PNB episode happened, I mean, there was this general belief in the system. I mean, when I say the ecosystem, banking ecosystem, that may be the worst in terms of NPLs, etc. Even NPLs coming to light and then being recognized, etc. That is behind us. With this new circular, RBI circular, are you confident that we are on that path? I mean, that we should think about this entire process in that same way, that things have been recognized, resolution is underway. That is one. And second, the circular puts the onus of resolution on the bankruptcy court. Are we putting too much pressure on the bankruptcy court itself? Because, I mean, it will also be tested, right? I mean, some of the large cases will have to be credibly settled. There will be appeals in the Supreme Court. So how do you see that getting established, the efficacy being established?
Right. So to answer your question, one is that PNB's case is more an operational risk, not a credit risk. Whatever has gone wrong, it is about the weakness in the operational risk management. That we have to keep segregated from the credit risk.
Okay.
Credit risk, as I said, that after March, this 17 review also, and the recognition part of all the NPAs up to March 17 has taken place. Wherever there were divergences have been declared, and going forward, the new circular has come. So certain cases where a standstill was available, cases of SDR or S4A, so that standstill will not be available. So these accounts will get recognized as NPA after 90 days delinquency. The action plan to correct that will start on day 0. As I said, that anybody who misses one installment by 1 day or 2 days, and we have to think that what is going wrong or what resolution is needed. Now, to answer your question on the insolvency and bankruptcy code, that is the only way forward. The law will evolve, the processes will evolve, but internationally and globally, any capitalist system to succeed, you have to have a strong bankruptcy process and law, and only then the cleanup of the system can happen. So effort would be that in those cases where matters can be resolved and are expected to give better result than the insolvency process, then banks will go for that process. If that process is likely to result into a suboptimal recovery as compared to expected recovery in NCLT, then we go for NCLT. So there will be a choice what to do, and that will all depend whatever is the best resolution in the assessment of the lenders.
Okay. Mr. Kumar, just had a quick question which is news based. OBC is in news today and it's down in double digits on fears that there is a fraud which is emerged in Simbaoli Sugar. Do you know if you have exposure to that company in particular?
We may be having some small exposure, and but not a very large exposure, that I am sure.
Okay. I just had one quick follow-up question. You did mention that post the RBI circular that came out on the 12th of Feb, whatever incremental recognition would be needed would be done in the March quarter, which is in Q4. So are we looking, or is there a possibility that maybe the numbers could probably be another loss this quarter simply because of, say, a higher provision figure based on gross NPA recognition based on the RBI circular?
So at this stage, I would not like to make any guess because our internal calculations are still going on. But when we talk about the quarterly performance, one big element which we will have to be mindful of the increase in the yield where mark-to-market provisions will hit most of the banks, and how much that will be, that is still not known, but that is one factor more than the provision which will impact the performance of all the banks, not SBI alone, but we have the largest treasury, so impact on us is always more than others.
Okay. Yes, sir, we saw that 3,400 crore number for the third quarter. Mr. Kumar, now you may have a fair assessment of how much of haircuts may be needed in the first 12?
A few more accounts are yet to be, the bids have yet not come, and they are still away, but the banks have provided almost 60%, 50% was mandatory. So the gap in provisioning may not be very large. That is my assessment of the situation, and particularly because the steel accounts, which constitute a large chunk, they are the resolution plans which have come. So that gives me that hope that on an average basis, we may not be much off the mark. And if there is even some shortfall, that will not be very significant if we have already provided 60%.
And for the balance 28 that went into NCLT in December, what are the likely haircuts?
Again, like in the second list also, in State Bank of India, we are holding more than 60% provision, but they would be smaller accounts. So the recovery chances in bigger accounts of steel, there the recovery has been much better because of the turnaround in the scenario. For mid-size accounts, the recovery may not be as high, but still a 60 to 65% provision may be just adequate, and if there is any gap, it will again not be as significant, because the amount involved itself is will be much smaller than NCLT 1 list, which had some very large exposures. So recovery in the NCLT 1 list is very, very crucial for us.
Okay. So finally, power. We heard that NTPC put out a tender to buy, and a lot of banks put in stressed assets when NTPC agreed to buy. What is your sense that you may end up in terms of stress in the power sector, gas-based and thermal? Are we likely to see more NPA recognition there?
Gas-based, I think all accounts would have been recognized by now as NPA. Luckily for State Bank of India, we did not have many exposure excepting one. And that in any case is owned by NTPC and GAIL. So other than that, we did not have any gas-based exposure, but power sector, yes. If there is any sale of the asset, as of now, there may be some losses even in that portfolio. But power sector, if we are able to hold on for some time, as like steel, I see much better recoveries in power sector, because the price on the exchange itself is showing an upward trend, and the summers are still away.
Okay, that's good to hear, sir. Final question. You know, where are you on the capital position? Is there enough left for growth because there are these accelerated provisioning coming in?
No, I think we are all right as far as the capital is concerned. Our all the ratios are much above the regulatory requirement. So at least State Bank of India, we are in a position to fund the growth, and whatever capital, in fact, government has provided, 8,800 crore, which will come in, so that we are just keeping aside for the growth and not using for provisioning or anything, because our ratios are much high.
Okay, sir, but what about the industry? Because as soon as the February 12th circular came out, a lot of brokerages thought that 2.11 lakh crore is going to be completely inadequate for the system. A lot of people were calling for exactly 50% more, at least 1 lakh crore more of capital. What would be your numbers?
I think it is an overestimate. 2.11 lakh crore is a big number, and in the first year, I think about 50% only has come. So 50% more is available. And going forward, for all the banks, because SBI always is the mirror. So I have a feeling that March 18 will not be good for the banks, but the next year onwards, the gross slippages as well as the credit cost will start coming down. So there will be some internal accruals available apart from the remaining amount of the capital which government will infuse. So somehow I'm never so pessimist as other people are.
All right. Well, good to hear that, Mr. Kumar. Thank you very much for your patience and for answering all our questions. Okay, I think the chairman summed it up much better than I could have, that the bad news is going to be there in the fourth quarter, but thereafter banks will start making profits. Now, is that an indication that there is going to be red for one more quarter? He clearly said that after that retained profits will start coming in, but in Q4 it will be tough. Now, I don't know if he's saying about his bank, but there is that fourth quarter.
But I think the recognition is there as well. I mean, I think it's how much
brokerages had recognized most of those stressed assets as NPA and had gone on with it. But nevertheless, you will see that recognition and provisioning hit in the fourth quarter.